Flint West reporting from the macro frontier. Brace yourself, partner. This one cuts to the bone. Debt, not money. The lie that fuels the economy. Out here on the frontier, the banks don't mint money. They mint belief. And belief, my friend, is the most dangerous currency of all. Let me tell you a dirty little secret they don't teach in school, but tattoo on the inner thigh of every central banker. This economy doesn't run on money. It runs on debt. On IOUs conjured from keyboards, blessed by central banks, and multiplied by the very institutions that claim to guard your wealth. Real money? That's a bearer instrument. No counterparty risk. You hold it, you own it. But debt? Debt is someone else's promise wrapped in a liability, duct taped to the next guy's obligation. And yet here we are, trading debt like treasure, treating credit like capital, and building castles in the sky with nothing but IOUs for bricks. Part 1. The lie it's all built on. You think money is real? It ain't backed by gold. It's backed by go along. Go along with the fiction that every loan is wealth, that every swipe of a card creates prosperity. The banks don't wait for your deposit. They create your loan. Poof, just like that. Every time interest rates fall, credit surges. Not from your pocket, from theirs, from nothing. Loan first, reserve later. That's the game. Part 2, inflation by design. Now here's the kicker. When they cut rates to stimulate growth, they're really just juicing the IV bag of debt. The money supply doesn't just grow, it bloats. And where does all that cheap credit go? Not to you, not to Main Street. It goes to Wall Street, to stock buybacks, to speculators hoarding hard assets like lifeboats on the Titanic. That house you can't afford? That's what happens when trillion-dollar QE meets a zero-rate mortgage frenzy. And you're left holding dollars that melt faster than an ice cube in Death Valley. Part 3, the consequence. Unequal by design. Inflation hits like a tax, but only if you're not rich enough to outrun it. You see, the game is rigged to inflate assets and debase labor. If you don't own the things that float, stocks, land, Bitcoin, gold, you sink. You're working twice as hard for half the dignity, because the Fed's wealth effect is really a poverty machine in disguise. Part 4, the warning shot. Now they're whispering about rate cuts again. The Fed's under pressure, political, market, you name it. Some want a return to the era of easy money, where the debt machine hums like a slot machine with no off switch. But here's the twist. Even if they cut, it might not work. The short end drops, sure, but the long end? It might revolt. Because if the market sniffs out fiscal insanity, yields go vertical, bond auctions fail, and the whole illusion crumbles. That's the risk. That's the cliff we're walking. So what do, you ask? We start by telling the truth. This ain't a money system. It's a debt trap. A system built to inflate, to extract, and to exploit, all while selling you the fantasy of prosperity. The dollar is a melting promise. Bitcoin is a freezing truth. #ice cold.